So let's move on and talk to the management about it. SBI Card saw a rise in spends and the customer base in August. To get a sense if this is sustainable, Rama Mohan Rao Amara, who's the MD and CEO at SBI Cards, joins us now. Mr. Amara, thanks a lot for joining us. Is this sustainable, this growth that you saw in both card spends as well as the customer base? And can you give us some numbers on what the average run rate could look like?
Good morning, Sonia. Coming to the run rate, as we shared in the past, we have been targeting to achieve a run rate net growth run rate of 300,000 per month. It was a gradual. We were hovering around 200,000 a few months back. Now we were able to make it up to 296,000 in the month of August. It is sustainable because we are targeting both improving the gross card issuance as well as controlling the attrition. So towards this end, we have done several steps. We augmented our digital acquisition capabilities. We launched a new journey like a sprint for acquiring a new to bank kind of customers. Similarly, we augmented the product bouquet with the addition of even the newly launched cashback SBI Card. So we are reasonably confident having kind of robust channels, both the banker channel as well as open market channel for acquiring. The volume we are reasonably sure this will continue. Spends wise, our spends have grown at SBI Card as compared to degrowth what is witnessed in the industry. This has come in the light of higher transaction share. Transaction growth, which is attest to the fact that it is more of a retail play rather than a wholesale of a corporate card spends. Both point of sale and online are doing well in several categories. All the key spend categories we have seen, the levels have come back more than the pre-COVID levels. We are sure that this robustness will continue.
So your share of spend is now about 18%, sir, right?
I think 17.6 or so, I think.
Right. Okay. No, is this, so both cards, share of spend, is the market also growing? Because overall industry is, net issuance of cards is down a little bit. Maybe because, the issuance was very high in previous months, so it slowed down a little bit. So is there, within an industry what's your prognosis for industry growth, and within that, you growing?
I think the industry figures for the month of August are a bit colored in the sense it doesn't actually capture the net growth of cards, excluding the impact of these inactive cards, the cards which remain inactive for more than 12 months, which have to be taken out of the card base unless the customer gives an explicit consent for continuing the card. I think that action is happening for different players at different times. I think large number of players attempted in the month of August, so which is the result where the base has suddenly come down by more than 2 million. With SBI Card, our model being a kind of fee-based cards largely, generally our active rate is much higher. Inactive portfolio may not be more than 5 to 6%. So even in this portfolio, whatever call has to be taken, we will take the call in September. So for a month or two, the base may be volatile. But as we always say, while we keep a watch on the market share, we are more focused on a sustainable growth, more in terms of what net rate will work for us. So we'll continue to focus on the key things that matter.
What's the this cancellation in active cards would happen, or is just started for the across the board for the industry?
First time it was it started from 1st of July. So obviously covering the entire portfolio. Each of the players would have reached out to the customers for seeking their consent. So large action will happen in August and September, but subsequently it's a BAU affair. Every month, whatever comes under this category, they have to be closed.
Okay. I just wanted to clarify some numbers. You said your card spends have gone up compared to industry average, right? In the month of August, the average spends came in at 13,250 rupees, which was not bad. On an average, you've been doing it for the last couple of months. What is the run rate that one can expect? Is this 14,000 something that you can do? Or do you think it could even get better, given that, demand has now picked up?
I refer to the increase at the absolute level.
Okay.
More of a volume, definitely it has increased marginally. While for the industry, it has come down marginally downwards. I think there is a play for the industry. There is a play of corporate card spends. which are highly volatile, which are more like a top line game. That also gets built in this per card kind of spends. At our level, I mean, like, as guided in the last analyst presentation, we are having a relook at the corporate card spends. It used to account for 22 to 25% of our overall spends. It has come down to around 15-16% in the month of July and August. We want to play in a calibrated way. We will have a kind of ramp it up only over a period of time. So to that extent, obviously, again, the spend per card will increase gradually for us.
Mr. Rao, how are revolve rates going to pan out from here on? Are they? Do you see them increasing? And how is that? What's the impact of that going to be on profitability overall, in your assessment?
Of course, for the current quarter, we have to make an assessment at the end of the quarter based on what is the absolute amount of revolver, what is the base also. Because as we are entering the festive period, definitely the spend volume will be high in the last 10 days. So that will have an effect of elevating the base. So we have to take a calculated, I mean, we have to make an assessment at the end of the quarter. But having said that, the improvement what we wanted in the revolver, I think it is not at the desired pace. It's not only for SBI Card, it's for the industry as such. So I think we are waiting and watching, but taking necessary steps, whatever is possible in terms of creating enabling environment, getting a right type of customer who has a propensity to revolve. Of course, while keeping a watch on the credit cost as well, because we only want to operate in a range-bound manner as far as the credit cost is concerned.
Okay. You said that now you're relooking at your corporate card spends because the demand is definitely picking up over there, and you look to ramp up that space. Any other strategies to gain market share? Because your market share in spends has actually gone up to about 17.5% as on August. Any targets that you have and any other interesting ways to sort of ramp up market share over the next 6 to 12 months?
I think we will, as I said, corporate card spends, it's a volume game. So we will play it to the extent like it works for us. But the focus is more on the retail, where we want to work on improving the engagement with the customer. For example, during this festive time, we have come out with more than 1,600 plus offers. Rolled out, by partnering with both online as well as offline merchant across the tiers. Idea is to make the shopping experience of the customer more rewarding. So that way, retail spends have a better propensity to add to the revenue and the bottom line. So the focus will continue to be on the retail spends. And overall, we would like to keep the market share for the spends at the same level or higher than the cards market share. That is the objective.
All right, Mr. Rao, thank you very much, sir. It's a pleasure. Thank you very much for joining us with all of that perspective. It's always good listening to you. So, SBI Card doing quite well. I mean, in the month of August, after many months of decline, market share moved up. And, sounding confident overall. 903 SBI Card, was, I think, flat to slightly high yesterday. It's flat today as well. In a market which is not. Markets are down. But the Nifty also is coming back quite nicely from the day's low.